Today's guest is someone who's navigated the courtroom and the capital stack with equal precision. Doug is a former litigation consultant who spent decades behind the scenes of high-stake legal battles, supporting top law firms and Fortune 500 clients. Somewhere along the way, he realized he was building life in a different direction. In this episode, Doug opens up about what it means to pivot later in life, how real estate became his tool for legacy, and how he now backs both buildings and films. So, from the courtroom strategy to capital strategy, this is a masterclass in reinvention, purpose, and building wealth with intention. Let's get into it. Doug, welcome. I appreciate you coming on the Chandler Chase Show. I mean, it's such an honor to have you. We met in Phoenix at Raise Fest, and I just really enjoyed your company. I thought your mindset and your background from legal and how you've gone into investing, and not only real estate, you're in film. So I wanted to bring you on to talk about, how you brought that legal mindset and made the decisions to get to where you are now.
Well, Chandler, first of all, thank you for the opportunity to talk to you. I truly enjoyed your company in Phoenix, and I'm glad we have an opportunity to extend that conversation we had. So basically my story, it's 30 years in the making. I'm older, probably can be as old as your father, but that's fine. There's nothing wrong with that. I mean, as I think I told you before, what I know now today with regards to what I knew back at your age, would I have done things differently? Maybe so, maybe not. But as you alluded to, I started in litigation. When I tell people that, if it was at a family event or a barbecue, first people ask me, "Are you an attorney?" I said, "No." And I asked that question to my attorney clients. I had over several hundred attorney clients. My clients were pretty much top 10, top 20 law firms in the world. Their clients were top 500 corporations, which included Hewlett-Packard, Qualcomm, Apple, Nike, IBM. And what we did, my company, which with regards to I was the president of, and we ended up having offices all over the country, was we created demonstrative exhibits, which are graphics, animations, and videos to help their lawyers and their experts explain very difficult to understand concepts so that the jury or judge can understand. So I did that for a long time, and now that's helped me in real estate, but I'll get to that in a moment. What really happened was I had success doing it. I guess I was pretty good at it. The lawyers kept on calling me back. And, basically I got pretty good at it. As a result, ended up doing it for 30 years. And times where I did it, where I had to go to the actual trials themselves and provide on-hand, on-site. So I've been at courtrooms all over the country. In fact, I've been probably in more courtrooms than most attorneys have been. I think I've been to trial probably more than 100 times and so forth. So I know a lot about the legal system. I've been fortunate enough to be able to be exposed to very, very talented, smart lawyers, experts, and so forth. And it was a very interesting experience with regards to the technology, if it was construction defect or patent law, wherever it might be. But when I was on site, Chandler, I worked 12, 15-hour days, anywhere from 2 weeks to 2 months straight, no stop, couldn't come home, missed birthdays, missed holidays with my family. And if it wasn't for my supporting wife, it would have probably drove me crazy. But, as I alluded to, I was pretty good at what I did. I enjoyed it, to some extent, but I was burning out. I was burning out towards the end. And when I left and kind of retired years ago, I looked back before I did and realized, I've done all this good work. I think I've done well as a husband. I've always was taught to be, from my father, taught me to be a provider, basically a good provider, basically protect my family, and I love my family. And, in the job I had, I thought I was a good provider, but I didn't have anything to show for it. I didn't have any ownership. And I remember when I first met my wife years ago, the two things I wanted to focus in on was financial literacy and health. I want to be able to take good care of myself. And when I was doing all these trials, I didn't think I was doing that. But one thing I did a lot of reading based on that, as well as financial literacy. And the thing I saw over and over again when I was around your age, when I first got married, was every self-made millionaire did it through real estate investing. And that always stuck with me through all those years working those trials. And like I said, I enjoyed it, had some good teams to work with, but at the end I was burning out and I needed a change. And I wonder, I've always intrigued by it. And this is something I wanted to get into. And I was at a particular volunteer event, and a friend of mine who I knew pretty well for a couple of years. Had a kind of scowl on his face. I was actually washing dishes at this event and so forth. He came by the sink and he had a snark, and I said, "What's going on?" And he told me, he had a business ask question. So started talking to him about it, gave him some advice. He left and came back, 10, 15 minutes later for another question. And I gave him some other advice based on my experiences. Oh, well, this is just free advice and so forth. So as that event went on, we ended up talking afterwards and led to coffee again soon after that, another cup of coffee, a couple in-house meetings. And then we started our first company 6 years ago, which invested in commercial real estate and so forth. So, and that's how I actually get into it. When I retired from doing the litigation consulting stuff, got into commercial real estate investing, and then into others down the road. But a couple of things that I kind of resonate with me with regards to my journey that shaped my investment. I mean, whenever we had a case, Chandler, I always ask the attorneys, what's the end game? Okay, what are we trying to accomplish here? Obviously, whoever their client was, if they're a plaintiff defendant, getting a favorable verdict. And the same thing is what I try to apply here. What is the end game? What are we trying to do with regards to the investment class we're getting into, or talking to my investors in investor relations? What are their investment goals? Because it's always find out what the end game is and do a reverse engineering. Okay, what are those objectives that we need to get to that end game, and what are those proof points that are going to support those objectives? And that was the same type of approach I took for what I used to call, with my old business partner in litigation, our visual strategy to complement their case strategy. Well, now it's about doing property strategy along with doing investment strategies, both for us internally as well as for our investors. So that's some of the lessons I basically learned, because it really comes down to why. Why are we investing into something? And it's not just what we're investing to, but why we're doing it. So those are some of the life lessons and so forth that I took that got me from litigation from where I was back then, and I had fun doing it for 28 years, and now I've been in basically commercial real estate investing and doing basically senior debt lending with regards to the film loans. So,
wow, Doug, I mean, we have a lot to unpack here. I mean, my background in banking is the liaison between the bank and existing law firms around the world, right? Like these top 200 to mom and pops, for depending on what the bank needs, right? And the hardest part is understanding what I call legalese, right? So you're taking, the E equals MC squared and that whole long equation, and you're condensing it into one when you're talking to these judges. What was that, language like, right? And that you take into what you do now?
Well, it's an interesting question, because when I got in the industry in the early 90s or mid 90s, I didn't know anything about law. I mean, I was, in fact, very intimidated by attorneys. When I got into the industry, I'm like, well, what's motions for eliminate? What's a summary judgment? For me to be good at what I needed to be good at, if litigation consulting or now commercial real estate investing, I have to learn about it. I want to research. I want to learn everything I can with regard to a particular topic. So when a particular attorney talked to me about a summary judgment, I had to go back and, okay, what was the context and what he did and talk to me about. And the same thing goes with the cases themselves. If I had dealt with a patent case later on in my career there, I'd always have the attorney send me the patent. Let me read it over first. Let me get an understanding of the technology at issue. It was a discrete cosine transforms, which is a video compression algorithm used in cell phones. Well, what the heck is that? So I wanted to learn that information first. So when I went in and met with the attorneys, I would at least be able to contribute in a positive way, rather than spending an hour, 2 hours having explained every point of it. So I always pretty much took in the initiative. I wouldn't say always, but later on in my career I did, because earlier on in my career when I first got into it, I thought myself as an order taker. And I ended up doing something where I didn't do my company, myself, or the client, and I did an injustice. As an order taker, as I said, I was very intimidated very early on. I didn't know the legalese and so forth with regards to cases, the law, and so forth. So when I was asked to do something I had to do a diagram of a city building here in San Diego, and I ended up doing it. And we were the defendants on this particular matter, and the other side used it against us. I had followed up with the attorney afterwards, and he said, I said, Mr. Attorney, how do we do? He says, we lost, and part of it was because your fault. I said, well, why is that? He says, because they used what we created against us. And you know what, Chandler? He was right, because that was the first time in a meeting that he asked me for something. He wanted something. And I gave him what he wanted. I didn't give him what he needed. And I knew I had doubt in my head, but I'm like, well, who am I? I'm just the guy, the order taker. Who am I going to tell him what he needs? That's what he wants. That's what I'm going to give to him. But it basically changed me. I had been in the industry 4 or 5 years. And that's when I first realized, you know what? I need to ask that question. And ever since I did that, I went from an order taker to a consultant. And I wasn't afraid to ask those dumb questions, because these attorneys a lot of times would be working on something for a case for could be months, if not years. And I was often brought in 2 weeks before trial, or a couple weeks before trial. I didn't know anything about their matter. But I learned to ask those questions. They're smart questions and they're stupid questions, right? No, they're just questions. Who cares? How would they expect me to know what something is if I didn't do the research? That's why I took the initiative always to start learning about the legalese, learning about the case early on, so then I can ask those dumb questions. So we can work together more efficiently, more effectively together. So it's kind of a nutshell around to answer your question, but some of the ways I had learned the system or the law or litigation over the years. Does that make sense?
Yeah, that makes sense. That due diligence process, and spending time with information, right? Those matters. I think, that comes across as, a thought expert in your content, right? In what you're working on. So,
well, of course.
Yeah, it makes sense. So from where you are now, right? And how you came from where did the transition happen, right? You talked about the coffee. What happened in that conversation, in that coffee experience, to make you say, all right, I'm pivoting?
I think one is I had success in my earlier career doing what I was doing. Like I said, I think I was good at what I did because the attorneys kept on calling me back. However, I wasn't being challenged anymore. I had became from being a director or a producer to being the president of the company. And a lot of times I was managing, supervising operations, overseeing admin, and also taking care of client relations and going to trial. And, all it was fun and interesting, but it was the same stuff over and over again. It became very redundant. And at the time, I think it was just time for me to change. And like I said, in the back of my mind, I had done all this work, was proud of the work I had done, but there was no legacy there. And I had probably my doubts, probably 2 or 3 years before I left that firm. And I did some consulting on my own when I first got into the commercial real estate investing. But it was something that was transpired over a couple of years. And when I talked to my current business partner, he had been in the industry in commercial real estate for 15 years. So when I thought about it, I thought, well, I'm starting over in my mid-50s. What's the smart way to do this? Get in with somebody who can provide me a safety net. So, if I make a mistake, he can be there to correct me if he can catch it in time. But, we talked a lot early on, but just because I knew him as a friend, it wasn't a very close friend, but a gentleman who I knew for a couple of years, and I liked him. We liked each other, but we weren't sure if it was going to work. So we went through kind of it's like anything. A partnership is like a marriage. You just want to get into a partnership. You want to get into a kind of a strategic alliance and so forth. We went through a series of personality tests to see if we were compatible with each other, and we were. And so there was a series of things where we did. And once I felt comfortable and confident we should move forward, it just solidified my idea of leaving, pivoting. I just felt it was time to do it. And the stress I experience now at work is different than what it was before. I feel happier, and it's just a second chapter of my life, and it's okay. But to be able to do it was a risk. I get it. But that particular industry I was in before, and working those long hours, 12, 15-hour days, it gets kind of old when you're older. And it's difficult. It's not for somebody in your 50s and so forth, well, in the 60s. So, I needed to do something different. I could have done some more consulting there, but I was always intrigued by commercial real estate investing, as I said, real estate. And it's not, because I said earlier, everything I read had to do with, everybody's wealth was always attributed to real estate investing. I wasn't looking to create an empire. I didn't have to be the next Warren Buffett or, whomever with regards to a real estate empire, but I always was intrigued by it, and having some properties that maybe I can learn more about and maybe pass down through my family through a legacy and so forth.
So how does it feel knowing that you have this legacy now?
It's far more rewarding than I thought it was, on twofold. One is having some now properties that I can pass down to my business owner who's 20 years my younger, or even my son, who ironically is in film. And we'll get to the film aspect of it shortly. So I've learned a lot about the film industry. I learned a lot about commercial real estate, and I like to think I'm doing parallel tracks with this, and that's why it's been more rewarding than I thought it would be, because I'm doing what I set out to do, and it's more interesting, and I'm having fun again working, even in my 50s. And so I got buddies back on the East Coast who are saying, "Hey, Doug, you ready to retire?" I'm like, "Why? What am I going to do? My golf game stinks." I've been to the beach here in San Diego many a time, and I'm having fun, and I'm enjoying myself. So it's been far more rewarding than I thought it would be.
Wow, that's great to hear. When you pivoted into real estate, did you start in commercial, or did you, stair-step your way with like a single family?
Well, our first deal was an interesting one. It was duplexes and single family homes. We ended up basically assuming the mortgages on 6 properties worth $1 million, and we got it for $15,000.
Wow. So when you hear about real estate, $1 million, $15,000 is a huge discrepancy. That's
of course.
So what is that? Those numbers sound great, but what's the numbers not tell you now that you hear that or see that? What does that mean?
Well, we've had to put some money in, some CapEx expenditures into these properties. We've got one on the market now that we're selling, the 5th of the 6th. We've done anywhere from 20 to 30% returns on them. I mean, they weren't great properties, but it was a good way to start, because the thing that my business partner taught me, and maybe something for the young developers who are going to watch this and so forth, besides taking a strategic alliance approach to a partner and aligning yourself with somebody with experience in the industry if you're young, also the best thing and my business partner said, "Doug, you need to do this. This is the way I learned. This is how you need to learn." I rolled up my sleeves and got into property management. And to me, that was huge in understanding it. And I didn't mind. I was president of one company, now I'm a property manager over here. I don't have an ego, dude. I don't have an ego. So I was like, okay, talk about doing your due diligence and learning the stuff. I got in, and I wasn't changing toilets because most of these properties are outside of San Diego here, but I learned the industry pretty quickly, hands-on, being a property manager. And to me, to learn anything, you need to get your hands dirty and learn from the very bottom. Because how could I be a good asset manager, construction manager, if I don't know anything about asset and construction management? Same thing with being a property manager. I understand these properties, how they efficiently work, both from just the operation side of it, along with the financial side of things and so forth. So when we first got into them, my business partner made me say, "Here's the property manager. Here, you deal with this portfolio," and so forth. So, the deals that first happened that way, it was almost too good to be true. I guess it was, but it was an interesting opportunity. It's not what you know, it's who you know. And we knew somebody in the banking industry. We were looking for some foreclosures. He's like, "I don't have any guys, but I've got this guy who's underwater on these notes, and you may want to reach out and talk to him about maybe doing a deal." And we did, and it worked out well for that. Now, is every deal going to be that way? Of course not. But our next one after that was basically 20,000 square foot mixed-use property, had apartments in it, I think 11, along with about 4,000 or 5,000 square foot retail space on the ground floor, and then had a basement with some additional space and so forth. And we went in and renovated that, and we finally, after 2.5 years, found somebody to take over the retail space, and turned out that they basically didn't want to lease the space because they wanted to buy the building. So we weren't willing to sell it because we wanted that to be a long-term investment. So we kind of threw out a number. Okay, let's just throw out a high number, and so forth. And it's not because, we didn't want to sell, but we really didn't. And we thought it was a legitimate, fair number and so forth. And we ended up doing it, but they accepted it. And it worked out well because now it's owner occupied with them. And we doubled their money in 2 years, 2.5 years. So these are some wins on some of the real estate that we've got into very early on with regards to things. Some of it was single family, duplexes and so forth, along with this commercial real estate particular property. And now we're focusing exclusively on multi-tenant industrial flex, where we're looking at, and that's where my business partner's bread and butter. He's been doing that for 15, 20 years. So we've done some of the mixed use, we've done some of the single family, we've done some of the multifamily and so forth. But it's the multi-tenant industrial flex where we want to go and buy a particular piece of property and basically put a condo map on top of it, with the idea that we can then convert those offices, those warehouses, and sell them back to the actual tenants. So then they can get the tax benefits themselves, and they're also saving for something. So that's kind of our game plan now with where we're going, even though we still have some commercial property in our portfolio.
And you said tax benefits, and you said a mix of condo, or put a condo on top of like residential condos, or is a condo in the sense of...
That's one thing that everybody asks. No, I mean, these particular industrial flex buildings have multi-tenant. So say one particular building may have 5 or 6 particular units. Typically what they have, Chandler, is an office space in the front, warehouse in the back, 18, 24-foot roll-up door, maybe a mezzanine above the offices and so forth, where you can get anything in there from a dentist, a plumber, a cannabis, a microbrewery and so forth. So it's very flexible with regards to the tenant usage and so forth. And a lot of these small business owners, and that's what makes up most of this country, 80%, if not more, if I'm correct, is small businesses. And we want to support small businesses. And, a lot of them are just putting their money into their rent and so forth. So by putting a condo map on top, if it's an office condo map, it gives them an opportunity to rezone it so that basically each one of those are units similar to that of a residential condo, but it's for office use only. Okay. And then, by parceling out each one of those particular units, we then have the opportunity to either sell it to that tenant or put it on the market for sale. And then somebody can come in and buy it. Now they're putting their money directly right into that piece of property, and they actually own it, just like a condo owner would be themselves if it's a residential, but it's actually an office condo map that's going on top of that particular property, that unit, if that makes sense.
That makes sense. Is this very similar to like when you see a Starbucks or a Dunkin' Donuts and it's like an out parcel, or it's a triple net?
No, it's a little bit different. That's a little bit different. This is, that's, corporate, that's retail. It's a different bear in itself. So, okay. But this is just small market businesses that we're trying to support.
Oh,
rather than the retail aspect.
Absolutely. Okay. A corporate and I'm very familiar with that flex mezzanine, industrial space. That's like the backbone of America, right? That's what.
Oh, exactly.
To start.
And that we're trying to support. We did some extensive due diligence in markets from the Mississippi to the west here. We wanted so we can look for or be able to find a piece of property that we can make it in a day's flight. And we went through 200 different cities of 200,000 residents and more. And from those 200 cities, we narrowed it down to 35 to 15 to the final 3 where we've been focusing on. And ironically, these particular markets are heavy into industrial flex. There's a lot of condo maps being placed on these particular properties in these 3 markets that we're focusing on. And we still are very aggressive and optimistic with regard to the potential here. And those 3 areas are Dallas, Texas, Denver, Colorado, and here in Southern California. So, and it's nothing we're new. This isn't a new concept. It's just something we believe in and we like. And this is our why, not what we're doing, but why we're doing, because we want to help small businesses. And we like the particular model with regards to this particular approach to helping them.
Now, talking about small businesses, when it comes to the film industry and investing into that realm, how does that compare with the benefits in tax, right? Investments, right? And where the location of the film is?
Well, it's interesting. I mean, how we got into that, my business partner had a friend who he grew up with, who is a producer, director, screenwriter, who's been in the industry for 30 years. And he came down from Los Angeles and had lunch with us and asked what we were doing. I said, we were, real estate investing. He said, you ever thought about film investing? And we were like, no, we didn't know anything about that. So what ended up happening is, once again, it wasn't just a coffee that led to another coffee to a meeting, but it came from having lunch to another meeting to a point where we had a strategic alliance that's formed with this particular filmmaker. And we got into these after we found out that films, Chandler, are very similar to properties, real estate properties. And the way that, once again, why you're doing this, you need to have a business plan. You need a business plan for your piece of real estate, and you need a business plan for a film. Because you need entities to be able to operate and run these particular type of entities, projects, and so forth. Also, with the film, there's an equity side and a debt side. Okay, so when obviously if you are putting money into a piece of property, if it's a single family home or industrial flex property, you're going to have an equity side, and you're going to go out and try to find a loan from a bank to help you finance it, the commercial real estate. Well, unfortunately, banks don't really provide loans on films. So what are these filmmakers supposed to do? Filmmakers, being small business men and women themselves, need the help. So there are ways to be able to do that, we found out. And we've done now, 8 or 10 different film loans right now. And we don't provide the equity, we provide the debt. So we provide loans, senior debt lending. Basically, any typical capital stack, we're basically, typically last in, first out, per se. And then how that comes into effect is what are we using for collateral, you may say? Well, fortunately, in this country, there's a lot of tax incentives. And one of them is at the state level, 33, I think, out of the 50 states provide tax incentives for filmmakers to film in their particular state. As long as you utilize their talent, their hospitality, their equipment, and so forth. So, I'll bring up New Mexico. And the reason I'll bring up New Mexico is because when I say that, everybody thinks, well, what was filmed there? That was very famous. Breaking Bad. Or you talk about Georgia with The Walking Dead. Those were built on tax incentives where the producers were provided tax rebates to film there. Well, what does that mean? Well, depending on the state, there's a certain percentage. Each state's different. Some of them give credit, some of them give rebates. And with regard to some of the films that we've been basically a part of, they were filmed in New Mexico, and other states where, for example, one where 25% was provided to the filmmaker, and on their $1 million budget, let's just say that, where they're given $250,000 free money. Okay. But the problem is, Chandler, that money is not going to be given to the filmmaker until 12, 15, 18 months after production. Because like anything, there's going to be a checklist, a criterion, which each filmmaker is going to have to go through and make sure that they're going to get this money. The state's not going to just give it away. You have to meet certain expectations, certain criteria. So, but it takes months to do. But the problem is that a lot of these filmmakers expect that money up front now.
Right.
They want that money now. So what we do, we provide a cash advance, a loan on that. We know if they have basically an approval letter from the state saying, hey, Mr. Filmmaker, Mr. Chandler, here, I've got, on your $1 million budget, here's $250,000, 25%. Then you can come and say, hey, Doug, I got this approval letter. Great, Chandler, let's do a loan that's worth something. Now I'll give you 80 cents or whatever on the dollar, and then you'll sign that approval over to me. I'll work with you to make sure that you're doing everything for the checklist to give back to the state. And then you've got now part of that money to go help you do your production. 12, 15, 18 months down the road, when the tax credit comes back, it comes back to me, not to you, for the full 100%. So we've been doing that. We've been providing and helping out filmmakers with regards to getting that extra, fill that gap between what they need for equity and closing funds and so forth, final funds with regards to if it's that or, whatever they may need. So that's what we've been doing.
Doug, that is very interesting. I had no clue. That's how it makes me think of big one, I guess because you're involving the government, right? It's like having a government contract, right? Once you get it awarded, the businesses have to front that capital, and a lot of time they have to put loans. Now, unlike filming, you can go to a bank for, those loans, but you're taking that same concept in the film world, and all right, here's this approval, right, or this award letter from the state. Now you have this checklist to do it. It's very, I can see how you're mitigating your risk, but what are some areas that you can't mitigate, right? how do you know the film is going to meet its goal, right? And finishing the product and finishing the film.
It's an interesting question that our investors have asked. There's two parts to this, and it's a very good question. Thank you for asking. Typically, I'll say this with hesitation, I should say, only because honestly, I don't really care if the film does good or bad, because the end product is not what I care about. All I care about is the film gets produced, it gets shot and done, and so forth, and that the filmmaker does the checklist and provides that to the state so they get the tax credit. That's the business side. The personal side is that we do develop relationships with these filmmakers, and we do hope it does well. I've been to a premiere before in the past and befriended one particular director who was very nice, and we helped him, get his project over the finish line, and it did very well, and we're very happy. He's a great guy, and the film has success and so forth. So for us, it's not a matter of the film doing well; it's just a matter of them, the filmmakers, getting done. If the film doesn't get done, then we got a problem. So that's why we've basically started a strategic alliance. Now it's a partnership with the film producer director and his business partner, who they have collectively 6 years of experience. In the event one of these films that we've helped loan on doesn't get completed, we would then turn to them and say, okay, guys, how much more money do we need to raise to finish the film? And then we take over ownership of it. So that's one way to mitigate it if it doesn't get produced. The second would be is in the event New Mexico, Louisiana, Georgia, they don't have any money in their fund to pay us the tax credit, which they said they've run out of money. Sorry, guys. Or the state goes bankrupt. It's always a possibility. That's not really the case, but it's more or less each state has a dedicated portion of their budget set aside for the film loans. And by the time the film is done, we apply for it, are the funds still going to be available for us? So that would be the other concern. And that would be more of a bigger risk for us, because then what we're going to do? Because now we've promised money, we've given out money, but that hasn't happened as of yet. So, it's something that we'd have to figure out and work out, which is something that we'd have to work out on.
Yeah. Okay. It's like you're figuring out as it goes, but you have this process, and that's always good to hear that you're going through this checklist.
Well, that's the most important thing, is that, unfortunately, the thing I learned with a lot of these filmmakers are they're craftsmen, they're creative types, and they're brilliantly minded, and they got this vision. However, in many film schools, I don't think business is being taught. So, if they don't have the business plan together and their budget and so forth, we send them back and say, this is stuff we need. It has to be a nice, tightly knit package. They need to know what they're doing. They can have a great idea for a movie. That's fantastic, but it's still a business, and we're still investing into somebody, not just, who they are, but why they're doing it and so forth. So it's a matter of getting back to what I've always learned. You know, like, and trust. Do you know them? Do you like them? And can we trust them that they're going to get the film done? But they have to have their checklist even before, they go through the state with us first, and when we do our due diligence and so forth.
Absolutely. It's like an investment partner, right?
Yep, exactly. But once again, as it goes back to our why, these are small business owners, businessmen and women who they need to have. It's like the industrial flex tenants. They have their own business. They've been fishing at it and so forth. But if we can help them, provide them maybe with a office condo that way, great. If it's a filmmaker, we can provide them the funds to finish their production, great. So, but both of them have to have certain things that we need for us to work, as you said, as a partnership.
Yeah. So Doug, we talked about real estate, we talked about film, and I've heard your transition from, corporate to consulting, now to investing, and achieve this, and still building legacy, right? What is it that you want now?
To continue doing what we're doing. I want to be able to help our investors achieve personally, I feel like I've always been a helper. I want to help people succeed in what they're doing. And now, rather than doing in corporate America and helping my employees succeed and get promoted, or help the company grow and do well, and help our clients, the legal clients, win their particular matter. Now it's a matter of, primarily for me, is I want our investors to be able to reach their financial goals and provide them with the products or the services, the means to be able to do that. Many of, if not all of them, are in the stock market, the bond market, public markets, but a lot of people don't know about private market investing, and I want to help educate them. Well, Doug, what about this and what about that? Goes back to educating, informing, and so forth. What I used to do with the litigation stuff. Well, what is a cap rate? And what's cash on cash return? What's the difference? And be able to help explain that in a way that if it doesn't make sense to me, it won't make sense to them. And the same thing applied from litigation. If a concept didn't make sense to me, then I'd then ask that question, what does this mean? Because if it didn't make sense to me, sitting in a meeting with an attorney, it wasn't going to make sense to the judge or the jury. And the same thing here. How can I expect my investors to invest with us and reach their financial goals if they don't understand? So if I get satisfaction out of helping them reach their goals and helping them understand what we're doing, so that we're, once again, that partnership aspect of it and so forth. So from a commercial side, from the investing side, building that legacy, and then also finally from the film side of it, getting an understanding of the film industry. As I alluded to before, my son is going to film school right now. And there's things that I've learned that we talk about, which I would not have had any understanding of it if I was still in litigation. So we rub elbows now and have fun joking about this particular, what a log line is and acts in the script and so forth, which I had no idea what it was before. And I still, to some degree, don't understand truly, but it's not my ideal position to be able to understand that. But right now, if I had to answer your questions I alluded to earlier, Chandler, it's a matter of just, for me, it's what we're doing is investing into film loans, bridge loans, and so forth. And we're going to get into construction, invoice factoring as well, all part of a private credit fund in the very near future here, to provide steady income to our investors, in addition to some commercial real estate investing, which will have the legacy. Those are the whats, but how we're doing it through basically the means we're doing it, but it's more or less the why. Just for me, it's helping our investors reach their investment goals, their financial goals. So if they want to have college education for their son or having a vacation home, whatever it might be, I want to help them reach their goals.
So in helping them achieve their goals, how do you talked about educating them, are a lot of these investors sophisticated, meaning they've had multiple investments before, or are they hiring, professionals that are doing these investments?
Well, since I'm fairly new at this, our pool of investors isn't that large, but most of them are accredited. They know about what they know the aspects of investing. With regards to those that are sophisticated, that just know a little bit about it, I'm feeling the point of educating them. And if the particular investment isn't right for them, I'm not going to put somebody into something that they're uncomfortable with or they don't feel right. And I'll be the first to tell them that. If I'm doing a raise and I'm short because of that, so it's not about me, it's about them, Chandler. So, if I want to make sure that somebody's comfortable in a particular deal, and especially now with capital calls, with multifamily, particular industry and everything that's going on in that sector, which I'm seeing from a distance and thought we would get into at some point, it's been problematic for some people I've talked to, some of the investors I'm dealing with, where they're in other deals like, Doug, I don't have the money to give you. I'm going to do a capital call over here and so forth. I said, okay, I get it. But it's a matter for me of just having the means to be able to walk them through, have them feel comfortable. Because last thing I want them to do is get into something and have the 30-day regret and saying, what did I just do with Doug and his business partner and so forth regard to things. Because I want people to be happy and get that, either if it's a monthly distribution or quarterly or whatever it is, when they close out a deal and so forth, they're happy and they're excited and so forth. That's what I want, the satisfaction that we're doing this together and having fun doing it and making a difference out there.
Doug, I can tell you had a consulting background, because you're finding the needs and wants and figuring out the critical path, right, in achieving that.
Well, so it goes back to that one case where it's about a want and need, and it's not a matter of what. I mean, I'll leave. I learned this: if you have the opportunity to give somebody what they want, always give them what they want. But if you have the opportunity to provide them either information or whatever it is, a service that you can also give them what you think they need, then you give that to them as well too, and let them choose. Because there's times where whoever you're dealing with, if the client will give you only so much information. You won't ever know the whole picture of what they're dealing with. They'll only give you what they want to give you, or they feel that they need to give you. But they usually don't tell you the whole picture. So it's up to you to try to give them what they want. But if it's not right, then you got to give them what they want, but 9 out of 10 times, sometimes it's what they need. And it's what I want to do is give them what they need. But if they're not comfortable with it, I'm not going to give, it's their decision, and I'm not going to force them to do it.
Wow. So in giving, people what they want, you've also given you yourself what you wanted when you, started this path. What would you tell your younger self?
Keep on making mistakes. Learn from those mistakes. Enjoy what you're doing. And now, Chandler, because I missed out on a lot of personal family events, holidays, birthdays, and so forth, you don't have to kill yourself to prove a point. And the point, I guess, was always to myself, that I always wanted to do the best I could for my clients. However, it took a toll on me, and it's okay if I can notch it back a little bit. So I probably would have said, don't work as much as you think you need to. Get the job done, get it done right. I always try to think I work smarter, but maybe I didn't always do such. But balance is the thing that I probably would have said, keep a balanced life. And your generation does understand that. I don't think our generation, my generation, the older generation did. We're prone, at least the people I work with, some of the attorneys I worked with, I mean, there's times I worked a 120-hour work week. You may say, well, wow, that's crazy. At one point I was proud of it. Now I'm ashamed of it. I mean, I had to do what I had to do, but it's just crazy. And a lot of those attorneys did that. And some of these attorneys had to be their very best and work at very high stakes at, litigation. And they basically had little to no sleep, as did I. And, it's part of the industry. I get it. But, it's something where I'm proud of what I did, had success doing it, but maybe I didn't have to work every trial, and I could have had more balance in my life. So that's probably the main thing I would have. Don't be afraid to make mistakes, but don't make the same mistake over and over again, because then there's a problem. Learn from those mistakes. And, once again, I learned over the years, but, I didn't realize first down the want need aspect of it and so forth. Determine what they need, that's really what they want. If you can give them both, give them both.
Now, someone in litigation, I know you read a lot. What books have transformed your mindset?
I think early on when I met my wife and I told you about reading, I wanted to be financially literate. I was heavily influenced by Robert Kiyosaki, Rich Dad, Poor Dad. Between that, The Cash Flow Quadrant, I've read about 4 to 6 of his books, bought his game, The Millionaire Next Door, The Millionaire Down the Street, a couple of Warren Buffett financial statement books I read and so forth. And those were influential with me. Up until recently, I've been doing a lot of AI reading, but a book by Justin Donald called The Lifestyle Investor. I think I may have mentioned that to you in Phoenix. If I would have known about that book back then, unfortunately, Justin was also influenced. The author was influenced by Rich Dad, Poor Dad, and reading that by Robert Kiyosaki. Robert had a great way of discussing the difference between his lifestyle, his friend's lifestyle, and so forth because of his Rich Dad, Poor Dad. However, Robert really didn't outline how to become financially successful, what goals and what you needed to do, the guidelines you needed to do it. Justin Donald does that in his book. And it's the #1 bestseller. I highly recommend that to everybody. So most recently now, that's, to me, my investment Bible that I highly recommend to your audience, my investors, yourself, as I said to you in February, March when we met and so forth. So, these are some of the books I've read over the years.
If anything on YouTube, articles about you or your past work were erased, what do you want to be remembered for?
I want to be remembered as a helper, as I alluded to before. It's very important to me. That guy, he's a good guy. He helped me with this. Oh, Doug, he helped me with that. Maybe I didn't always agree with what Doug had to say, this, that, or the other thing, or he was always transparent, he was very honest, had integrity. He probably didn't always tell me what I wanted to hear, but what I needed to hear. But he helped me get where I am. So to me, it's about honesty, integrity, transparency. I was always known with my employees lots of times to probably told them things I probably shouldn't have told them about with regards to our company, only because I wanted them to know what was going on. So if something did happen, we had to have a layoff or we had to close an office, wherever it was, they knew, it wasn't personal, it was business. So I was always fairly transparent and so forth with regards to what I've done business-wise and so forth. So helper, integrity, honesty, hardworking. Those are some of the things.
I love it. So Doug, if anybody can get in touch with you, right, how can they reach out to you? Where can they find you?
Oh, we've got the two companies. Our commercial real estate company is HoganDouglas.com. And then their senior debt lending side of things is HD First Capital, HD-First, spelled out as the number one ST.com, or they can basically email me at Doug@HoganDouglas.com. And I'd love to talk to you guys more about this stuff. So anybody wants to reach out to me, I'd love to just talk sports, talk San Diego, talk, anything. So I'll be more than happy to chat with anybody to talk more. So
sounds good. And there you have it. Doug, appreciate you again for coming on the Chandler Chase Show. Take care.
Chandler, thank you so much. Really enjoy your company. I always enjoy talking to you. So thank you very much for your time. Truly appreciate it.
Thank you. Doug's story reminds us that it's never too late to build something that matters. From legal graphics to legacy assets. He's proof that a skill set you spent years developing can be repurposed. And if you have the courage to evolve, whether you're in your first chapter or your 35th chapter, remember what Doug said. Give people what they want, but also what they need. And if this episode spoke to you, share it, review it, join us on the next one. This is the Chandler Chase Show, where we build legacy one story at a time.